Alright, thank you guys so much for tuning in to today's live stream. Today is May 6th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. So we don't necessarily have any, red folder news. No, nothing really too volatile. One thing I do want to draw your attention to is this trade balance here. So we have imported more than we have exported, meaning that there's a trade deficit, and it's not good, right? It just means that we spend more money buying things than we do making money from selling things. So we are running a trade deficit. So that's just one thing that I do want to draw your attention to here with this news. But that's pretty much all I have for today, at least fundamentals wise. We don't really have too much, we don't really have that much of a crazy news day today. However, tomorrow we do have the federal funds rates, which are going to be released tomorrow, with Jerome Powell speaking at 1 p.m. Central Time, and on Thursday we have unemployment claims. But coming into today, we had a interesting closure yesterday, right? We didn't take out the weekly high as I was anticipating, but we did create we created a down close daily candle, and then whenever we opened up here on, during Asian session on the Tuesday's candle, we actually took out previous day low, as you guys can see here. We took out previous day low, and we continued to expand lower. One thing I would draw your attention to here is if we can take out this daily market structure shift level. So what do I mean by that is that this daily fair value gap, let me just clear this up for you guys. This daily fair value gap right here, this daily fair value gap, we traded into this daily fair value gap, and then we expanded higher. So this swing low that we created should be respected if we're going to continue to the upside, right? If you guys watched my live stream yesterday, you guys would have noticed that my weekly draw of liquidity is the weekly high. I want to see us take out the weekly high, but if we do end up taking out this daily market structure shift here, then I'm going to have to change my my analysis on the weekly time frame at least, and kind of have a different approach, because this would indicate that there's been a daily market structure shift, and that there could be a possible continuation lower after taking out the daily market structure shift. And let's see here, to bring this back, this little Gantt box, this shows me the equilibrium level, right? So from the swing low at previous week's low and the swing high at previous week's high, there's a dealing range, right? There's a swing low, there's a swing high. And within that swing low and swing high, there's, like I said, there's that dealing range, and it creates kind of like boundaries. So anywhere within this green box would be considered discount, right? And if prices are going to show me a bearish sentiment, right, the least, like the bare minimum that I can see prices trade into is this green box here. And I'm going to be watching that coming into this morning, coming into the trading session today in general. If we do end up getting, continuing to suggest bearish prices, then I would like to see us trade into this discount level here. And yeah, other than that, I mean, that's pretty much all I have for today, at least. Market structure shift. I'm gonna watch if we can take out that market structure shift level, and if we do, then I would like to see us continue lower towards the discount of the dealing range. Yesterday's price action was pretty interesting, right? Like I said earlier, yeah. Yesterday during the live stream, I was bullish. I wanted to see us take out previous day high, and this is kind of like a telltale sign that we might not be bullish. Is look at how we traded it above the weekly open here, and like immediately after trading up into the weekly open, we began to sell off. That's not a good sign that we're bullish, right? We traded above it and then we just continued to sell off. And right now we're kind of like in between the monthly open. So did we create the monthly high? I don't think so. But I think we're just going to have another chance at trading below the monthly open here, but we'll see. Yeah, that's pretty much all I have for my technical analysis, at least. But yeah, that's pretty much all I have coming into today. I'm gonna get into the chess game just so I can move up. Oops. All right, let's see. I can bring out my bishop here, and then what can he do? This way? Okay, he's not. He's gonna decide not to do that. I'll take his. I'll take that, my dear friend. He's gonna kick me out? No, he's not. Interesting. I can bring this back here. His horse could go here, actually. Let's not allow that, though. I'm gonna do the same side just because I don't want him to continue just. Attack this right here. What? I feel like he just trolled, but like, I should really make up my mind here. I'm just gonna clean this one up. Just. Oh no! Oh, I lost. Bro. Oh my god. I'm pretty sure I was doing that. How unfortunate. My gosh. My golly. My golly. It's kind of sucky, bro. Is he trying to get me to? Let's see. I might still be able to take this. I think I win this. Oh. Okay. By golly. Dude, bro. Gosh, oh my gosh. Wait, I think it's crazy. Yeah, I think we might have to just FF this game. Bro, that was terrible. That was a terrible game. I think I played pretty good early, but that was terrible. Fuck. I'm gonna go here. Is this free? No. I mean, I have this protecting it, but unless sloppy. Really. Hmm. 10 minutes left. Looking like we are going to have a bearish closure on oh my gosh, he goes here, I go here. I think I was for sure winning this game, bro. Not even trolling, I think I was. Oh gosh, this guy. Holy moly, I'm actually getting. This is not good. This is not good. Look at this, bro. Oh my god. Oh, well, looks like we're about to take out that market structure shift here. Time management is okay. Not too bad. I feel like his king is in such a bad position right now. They can't expose it. Retrading. Perhaps. Perhaps. There's that market structure shift. If we take out this market structure shift here, like I said, my morning objective would then be the daily market structure, the discount of the dealing range, and how we're going to close on the 4-hour candle, and the 4-hour candle and the 8-hour candle. Wait. Did I calculate that wrong? Holy moly. Okay, I'm pretty sure I calculated that wrong and I was in winning position. That would have been better, for sure. And even then, I'm not completely losing yet. Oh my gosh. That's probably the worst move to have made there. Well, 5 minutes left until the closure on the 4-hour candle and the 8-hour candle. So let's take a look here. Oh, it looks like we actually did take out that market structure shift. 74825. Okay, so it did take it out. And so, yeah, my morning objective is going to be based on how we close here on the 8-hour candle and the 4-hour candle. And it looks like the hourly candle too has the same low. So here I would actually, I'm gonna anticipate for us to take out the 4-hour low and the 8-hour low within the next hourly candle. So within the next hour, I want to see us take out the hourly low and perhaps expand towards that discount, the discount of this dealing range here. ES didn't take out the daily market structure shift though. So there is a SMC divergence right now, but I don't think this SMC divergence is going to hold. One thing I do want to mention here too is that on NQ we have taken out previous month's high, whereas on ES we did not. So there is that SMC divergence. Let's see. Market structure shifts. Monthly SMT. 2 minutes left here. The 15-minute low is the same low as the 4-hour low / 8-hour low. The same concept of scope is going to be applied here. That means I'm going to anticipate for us to complete the 4-hour objective and the 8-hour objective within the next 15 minutes instead of the next hour, just because of the 15-minute candle. 15-minute candle is telling me that we should complete the 4-hour objective within the next 15 minutes. Yeah, I mean, this market structure shift here is like pretty much like one of the main reasons why I want to see lower prices and the higher time SMT, because yes, didn't take out the previous month's high yet. There is that large SMT. About like 40 seconds left. With the way that we're closing here on the 8-hour candle and the 4-hour candle, I really am bearish, right? Suggesting that we're most likely going to take out that 4-hour low and the 8-hour low. $15 seconds left. Let's see. So, like I said, the next 4-hour candle, we should open up. I doubt we're going to get an entry pattern, but we're going to open up. And then we're going to maybe trade up a little bit higher and then take out the 4-hour low. So there's the open. And within the next 15 minutes, right? So watch carefully on how this 15-minute candle is getting formed. This is the open. We trade up a little bit higher, and I want to see us, do exactly that. So we traded up higher, and then we ended up taking out the 15-minute low, which is the same low as the 4-hour low. So the morning objective, the 4-hour objective has been completed. So there's that. So look at that. We traded up, we took out the 8-hour low. Same thing with the 4-hour time frame. Just because the 4-hour low and the 8-hour low, hourly low, 30-minute low, and the 15-minute low is the same low. So coming into the rest of the session. I'm going to rely on the other intraday time frames, such as the 6-hour, the 10-hour, and another 4-hour candle. So depending on how we close there on those specific time frames will give me another directional bias. But for now, I'm going to be nimble. I'm not going to stay on these time frames anymore. I'm not going to stay on the time frames that just got completed. I'm going to wait until more time has passed and more candles has closed for another bias. But yeah, very simple, super simple way of approach. See. Yeah, interesting. That market structure shift, that on the daily time frame at least, really means this isn't the low. I really don't think this is gonna be the low. Yes, hasn't taken out the daily market structure shift though. So that's just something I do want to keep in mind. Actually. But yeah, that's pretty much all I have for today, at least for the session. Let's get into the trading journal, just so I can show you guys what I have in mind, some of the pros and cons, and what I can do to grow. Alright, so coming into today, or I guess coming into this week in general, what I should continue to do is to take consistent trades, right? Give me 1 second, I need to sneeze. Never mind, scratch that, I couldn't sneeze. But yeah, so coming into this week, taking consistent trades is going to be, it's always the utmost important value of mine here whenever it comes to trading. Just being consistent, requiring that higher time frame objective, a model, and an entry pattern. You guys may see that I have a directional bias. I kind of have an understanding of where prices wants to go, but if I don't if I don't have the three components that I always look for, then there's no reason for me to be forcing anything. So, like I said, higher time frame objective, the model, and an entry pattern. Those three components makes me consistent. It's not about saying that I'm going to be consistent. It's about actually doing what's required to be consistent. And yeah, so those three components required every single time I trade. And second, understanding what a higher time frame objective even means. So I have two kind of I guess you could say like patterns that I look for: an expansion model and an EQ model, equilibrium model. What that means is this would be considered like an equilibrium model where, with the way that we're closing here on the daily candle, and like I want to see us trade into this discount level. That would be a higher time frame. That's one of the, I guess, patterns. Another is an expansion model, and it's a little bit simpler to show you guys through an example than just speaking it. But yeah, those are the two kind of reasons why I want to see macro reasons why we should be moving in a direction. Third, having a fair value gap as an entry pattern. So to get a deeper perspective about what my entry pattern is, so yeah, my entry pattern always going to be the entry. It's always going to be that fair value gap. It allows me to understand when and where there has been displacement. So like fair value gaps are like this gap right here. So like this inefficiency right there, that's a fair value gap. And having that as an entry pattern, it shows me where there has been strength in the markets, and if I can like ride that momentum almost. And just some things I can work on when fundamentally breaking down a company, right? I really want to get good at creating those DCF models, and not just doing them, but truly understanding the concepts of a DCF model, right? So essentially what you're doing is you're getting the free cash flows, and those are the cash flows that goes directly to the shareholders, and using those free cash flows to come up with an enterprise value. From enterprise value, you get equity value by subtracting the cash, not subtracting the cash, adding the cash, subtracting the debt, and divide that equity value by the shares outstanding, and then you'll be given a price per share. Is essentially what that is. Let me give you guys an example. So this is a model that I created here yesterday. Let's see if it loads. Well, it doesn't seem to be loading right now for some reason. Well, I'll put this on the side, see if it would load or not, but yeah. And some improvements, consistent trades, right? Like I said, it's a top value of mine. Like, it's probably like the number one rule of mine is to be consistent. Reviewing the higher time frame objectives and how to actually align your model with the higher time frame objective. And for this week, I will do my best in creating a DCF model over Meta. I've already done Amazon. Oh, and it just loaded. And Hood, which is Robinhood. So this is the DCF model I have for Amazon here. The theme was black and yellow because that's just the colors of Amazon. But yeah, so I mean, like I said, it's my first couple of times making a DCF model all by myself. And the price per share that I ended up getting, I guess, is $125, where its current trading price is $186. I don't think that's accurate, right? I think Amazon is like, yeah, I haven't learned enough for me to really like say that with utmost confidence that this is correct. But like is Amazon trading at a fair value right now? 186. That's a question to be asked, right? Let's see, where were they like during the tariff week? So they traded down to 161. Not even that bad. And based on the model, it's 125. That might be, I mean, that's probably wrong. But the assumptions I had, I mean, so, you know, from all the net sales I had here, I did the average of the remaining 3 years, 2022, 2023, and 2024. We had, we had a pretty large growth rate over 2017 all the way up until like 2021, where it was 20 plus growth rate. So, and then from 2022, 2023, and 2024, our growth rate began to kind of like scale down, like averaging around like 10.5%. And so I took the average of these 3 years growth rate and I applied them to my 2025, 2026, all the way down to 2030. And I thought it was, I mean, that seems pretty reasonable. I don't think it's a bad assumption to make. I mean, maybe Amazon's growth rate should be assumed to be higher. With the new, AI is coming out, who knows how big Amazon is going to be in the AI war. It's AWS kind of infrastructure too. It's business model with the AWS. I would say it's growing too. Let's see, capital expenditures here. So these cap expenditures I feel like are going straight to that AI, not AI, but AWS area. But I mean, I can tinker around with these growth rates, but I like where they're at right now. One thing I did see is that their operating expenses were almost like 90% of the total sales. So like if we made $100 in total sales, right, the operating expenses, if this was Amazon, would be like almost $90. So you'd be taking home 10. And it's reasonable. I mean, it's a pretty large company, and they do have a lot of like logistics to take care of. And I mean, I don't think their model allows for a high profit margin, but yeah, so pretty high operating expenses, as you guys can see here. And yeah, so from that I got the earnings before interest after taxes. So I didn't include interest income or interest expense here. And then I went straight to D&A and capital expenditures. And yeah, I added back D&A, subtracted capital expenditures, and turns out that we had a change in net working capital. This is positive. This number I'm essentially adding back into my free cash flow. But let's see. So my free cash flows are here, 64, 56, and this is in millions, by the way. So 64 million. Yeah, so 64,000 million. I don't know if that makes sense, but yeah, that's where I got 125 from. Maybe today I'll do one over. Let's see if it's in my schedule. So yep, today I am going to be doing Robinhood, and we'll see where that is. I mean, it's a retail, almost like a retail investors. It's like the main one that you think of retail investor platform brokerage. But yeah, is that going to be all for the live stream today is the question. Let's see, so we are pretty much, yeah, I mean, yeah, I'm actually just going to close the charts here. I don't want to force anything. Really would hate to be the guy that forces a trade and to just take an unnecessary loss. I've done that countless times, and I've learned my lesson. There's no need for me to really force anything here. And yeah, I'm just gonna close it here for today. Thank you guys so much for watching, and until next time, be safe.